Buy or sell Chevron. First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So we have a theme here under the other themes that I simply call fossil fuel. 76% from the 52-week low, which is massively outperforming the S&P 500. We have seen a little bit of correction here, but not much. Chevron, fossils, 53% from the lows and basically at the highs. The vast majority here of damage to the theme is from Seadrill, as you can see here. So here is the company's website: leadership and innovation to advance a lower carbon future. So interesting choice of word here, lower. So not no carbon, but lower. So yeah, very modest expectations. Okay, so so here we have some breaking news. Futures slump after hot inflation data. Yeah, so for those who thought that inflation is just going to be amazing for the financial markets, the story is very complicated. Especially because there's different levels of inflation in different areas of the economy, and all are competing for the same share of, well, the same wallet. Hence, yes, companies can increase prices, but when all companies start increasing the price of various products, to offset inflation, then yeah, it becomes this zero-sum game. Okay, so here is the CVX chart, Chevron. Weekly data points, long, big, super picture. We do have some time cycles. Let's see whether they are reliable or not. Well, let's see how far back they actually go. So ever since 1997, rise, decline, rise, decline, rise, decline, rise, decline. So the time cycles have actually been, pretty interesting time cycles here, and we are currently part of the rising phase. If you look at some previous time cycles, if as an example we take this one here, you see that we peak a bit later. Here, if we draw a rough estimate, we peak a bit later into the time cycle, but here we do actually peak way more early. So at least based on the most recent time cycle, we peaked early, while these two back here, you see that we peak late. Okay, so let's explore a bit further. So we go here to the daily data points, and we see that we have had a very aggressive rally, and we have had a breakout. When we have had a breakout, it begs the question: what happened previous times we had a breakout? So we did have this back here, but this resulted in a double top instead. So let's just quickly draw that in. So we have like a double top pattern, which is bearish, and that did certainly result in a pullback. When we go back here, then we do get a breakout, and you do see that initially we had a decent rally here after the breakout. So let's draw it in like that. But not that much later, we did see a major reversion. So buying the breakout there was not exactly, well, it wasn't the best time. So let's actually measure with this tool. So let's say that you go bullish here, you buy the breakout. Initially you got a 10% rally, but then you got a 13% pullback. So let's measure a bit. So if you bought the breakout, max gain 10.51%. If you instead bought, let's say, the 200-week moving average, then you instead would have a 42% gain. And even if you were to sit and throughout this pullback, you would have a approaching an 11% gain. So yeah. This is one of the many reasons why I'm not a huge fan of interpreting breakouts as like a great entry opportunity. Breakouts are great if you did enter much earlier, but when you have the breakout and then go long and you have no position before, it's very messy. Anyway, based on the very recent history here, there's reason to be a bit skeptical of this breakout. So how big percentage-wise has the breakout been? So from that level to here, 3%, 4% towards the highs. But let's explore further. Okay. To be perfectly clear, when I make these videos, I do a lot of filtering beforehand, so I obviously know a bunch of stuff that will come up now. Anyway, so let's actually look at the RSI, because the RSI is it's been sending very good signals. So here you can see the current weekly RSI, which is at a very high level. When we look here long term, going back here to 1999, you can see that it is very rare for us to have this RSI level and these PPO levels, which, you know, the PPOs, they show us the distance between price and the various moving averages, 20, 50, 100, and 200 week moving average. Also MACD here, we have never seen this, seen a stronger momentum than now. As such, it is fully possible for Chevron to go even higher. Though looking at the history of the security, it is pretty darn clear that betting on a further rally, it's a bet with a low probability of success. When we look here specifically at RSI and we look at previous times we had a similar RSI reading, we go back here, it formed this peak. This was a major peak before a sell-off. So if you went short here, yeah, that worked out pretty darn well. The time before that, again, it was here. You see, the exact RSI level we currently have, and that was a very good time to go short. If we quickly just measure the sell-off, so from here to there, that is a 13% pullback. Let's go a bit further back. You do have this time, but that was a bit lower RSI, but definitively led to a full pullback. And then you have this situation here where we actually did go higher. So if I measure a bit here, so you did have the same RSI level here. Initially you go up 8% and then you pull back 15%. So that one also did worked out pretty well for bears. And when we look here at the distance from price and the various PPOs, these are very, very, very high levels. The last time we had extreme RSI and extreme PPOs was back here, and that is when we had that decent pullback. On the daily data points, we have a very similar message. Okay, so we are definitively overbought. Looking here at Finviz, we are testing the upper end of this trend line, performance year to date, and this is still early in this year, 17%. That is very, very strong. Options are available, so there's all kinds of fancy strategies, if you are feeling bearish. So I will give the technicals to the bears. When we look at seasonality, so here to the right, we have the average over the last 5, 7, and 10 years. So in this instance, it gets a bit messy, because if you look at this period here, so let's measure it. So the usual seasonality is that we tend to see weakening between the 3rd of December and heading towards here, mid-February. That is the typical seasonality that you can see here. So let me just draw that in such that it is clear. That is what you see here. That is the typical seasonality of this stock. But this year, instead, we have seen a very strong rally. The same time where we usually tend to see weak seasonality. The seasonal data, however, suggests that there's a tendency for there to be a rally here between March, April, and May. So this is very messy. So there is a risk that the bullish seasonality came too early, so to speak, because we have literally had, the opposite of what we usually have. So that is something to just be aware of. If we look at, the seasonality to the left, which shows us the seasonality from a bit of a different perspective. So let's start here with the last 5 years. Then February is strong. March tends to close higher, but on average there is minus 3% loss. Over the last 10 years, February is decent, but March usually has no move whatsoever, literally zero. Closes higher 67% of the time, and over the last 20 years. Then February, it does tend to be strong. March, yeah, it's 1% gain, closes higher 63% of the time, and then April is very strong. So I would say that the seasonality here is messy, because we usually have, as I said, weakness in the months where we, in this year, had a lot of strength. It begs the question, has the bullish seasonality that we usually have in March, April, has that been used up, so to speak? Okay, so let's now look at the fundamentals. So SACs are really feeling the love here. To buy, B value, A growth, A momentum, industry rank top 8%, oil and the gas. I'm a bit, puzzled about how a stock can be at, all-time highs and still be like B value. Because there's supposed to be an inverse relationship between the stock price and value. Anyway, the market cap is huge, $266 billion US dollars. 3.9% dividend yield, so great yield when we look at what the insiders are doing. So the latest move is a sell, buy, sell, buy, buy, sell, buy, sell. So the insiders are quite mixed here. So there's not like a very clear direction. When we look at the transaction value, this was a very big move, and this was a sell. So that's something to take into account. When we look at the consensus estimates, 29 analysts are covering the stock. Average price target is 1.7% above the stock price. That's not exactly, impressive. It's a bit more upside, but the analysts, they do think that it is pretty fairly valued. The highest price target is 20% above. And then we literally have almost the exact thing in terms of the lowest price target, minus 21-ish% below the current stock price. Yeah, so let's now look at the correlations. So long term, we have 7% with S&P 500, 98% with XLE, which is the energy ETF, then 90% with XOP, oil and the gas, exploration and production ETF. It's so interesting that we do actually have stronger correlation here with XLE. And then with crude oil, we have 67% correlation. Daily data points. 48% SPY, XLE, 96%, 80% with XOP, and 77% with crude oil. So the strongest correlation we do get is with XLE. Hence, it makes sense to do a quick technical analysis of XLE. Start here with the weekly data points. So we've seen a very meaningful move here. Do we have like overbought readings? Yes. The previous time we had this kind of RSI level was back here. That led to a pullback. And when we go a bit further back, we had this level here. Did get a sharp pullback. This one, a more sustained pullback. So we do have some overbought readings here also in the XLE. When we compare Chevron against XLE, then we do have one of the classic patterns. So let's draw that in. This looks a lot like a shoulder, a big head, and a shoulder in development. So there is the possibility that longer term we will see a situation in which Chevron underperforms the XLE. So that is something to take into account. Now let's compare the XLE against the SPY. So in this situation, you see that for a very protracted amount of time, the XLE weakened systematically against the SPY. But then we did have a very fundamental trend change here. This is where you see that there's more even battle between the bulls and the bears. And recently we do see some signs that we could enter a new paradigm in which the XLE, the energy ETF, more longer term outperforms being just plainly in the S&P 500. Okay, so to sum up here, my take on Chevron. Looking at the technicals, we are clearly, very clearly overbought, and when we did look at what tends to happen with breakouts and also overbought readings with Chevron, it usually results in a pullback. When we looked at the seasonality, it was very messy. So I would give it just 50-50 here. I would lean a bit bearishly, given that we already have seen a very strong rally. Looking at the fundamentals, that was also very messy. SAX was really bullish, but the price targets were, they were very modest. They basically think that the stock is fairly valued. And when we looked at Chevron against the XLE, we did have that head and shoulders pattern, which is bearish, and then we did see, but against, looking at energy against the S&P 500, then there were some hints that longer term there could be some interesting opportunities in the energy sector that are more interesting than just being in, purely in the SPY. So, to take all the data together, I think there's far more reasons to look at bearish opportunities for Chevron at this point than bullish opportunities. But of course, we always use stops.